Hello students, welcome to Mr. TK classes. Today we are doing the bank reconciliation. This is question 1 from FAC 1502 October-November 2017 UNISA question paper. The question reads, KA Furniture Stores is a furniture shop operating in Ivory Park. The following information appeared in the accounting records of the business and relates to the month of May 2017. This is our information. Required A. Complete the cash receipts journal and the cash payment journal of KA Furniture Stores for May 2017. Start with the totals of these journals as at 31 May 2017. Show only the details and bank column of each journal. B. Prepare the bank account in the general ledger of KA Furniture Stores properly balanced at 31 May 2017. C. Prepare the bank reconciliation statement of KA Furniture Stores as at 31 May 2017. This is our answer book. This is what we need to know about bank reconciliation. All the cash transactions of the entity are recorded. So the entity prepares the bank account or cash receipts journal and cash payment journal or cash journals. On the other hand, the bank generates the bank statement. So the balance as per bank account and the balance as per bank statement should be the same. If they are different, the bank reconciliation has to be performed. And what causes those balances to be different? The answer is errors and omissions. Errors and omissions in the bank account or CRJ and CPJ or cash journals simply update the cash journals. Errors and omissions on the bank statement reflect on the bank reconciliation statement. We don't update the bank statement because it is prepared by the bank or it is generated by the bank. So we can only reflect on the bank reconciliation statement. So the bank reconciliation statement represents the bank statement, right? The bank reconciliation statement increases on the credit side and decreases on the debit side, which means that we have our receipts on the credit side and our payments on the debit side. Whereas the bank account increases on the debit side and decreases on the credit side. So we have our receipts on the debit side and our payments on the credit side. This is so because the bank account is prepared by the entity and the bank statement is generated by the bank. Remember, the bank statement is represented by the bank reconciliation statement. So the entity is sitting on the other side of the table, whereas the bank is sitting on the other side of the table. That's why we have opposites here, right? Let us go back to our question. Number 1, right? The totals of the cash receipts journal and the cash payment journal were 167,000 and 202,000 respectively. So provisional total 167,000, provisional total 202,000. Number 2, the balance in the bank account in the general ledger of KA Furniture Stores was an unfavorable balance of 40,063. An unfavorable balance is a negative balance. Balance brought down. 40,000 and 63. The bank statement of KA Furniture Stores for May 2017 had a debit balance of 44,970. Right? Balance as per bank statement. Balance as per bank statement. A debit balance of 44,970. Debit 44,970. Number 4. The bookkeeper of KA Furniture Stores compared the cash receipts and cash payments journal for May 2017 with the bank statement for May 2017, and she noted the following differences. 4.1. The following checks issued in May 2017 were not yet presented for payment. So when checks are issued, they are recorded in the cash payments journal. Right? Which means they should also appear on the debit side of the bank statement. Right? They should appear on the debit side of the bank statement. And 4.1 is saying they were not yet presented for payment, which means that they did not appear on the bank statement. Since they did not appear on the bank statement, we should reflect them on the bank reconciliation statement. Right? We should reflect them on the bank reconciliation statement. We are going to say debit outstanding, right, checks. Debit outstanding checks. These are payments, right? Okay. So check 456. All right, let me copy this. Check 456, 20,000. Then check 460, 14,700. Check 467, 9,900. 4.2. A deposit made on 31 May 2017 for 65,000 did not reflect on the May 2017 bank statement. Okay, so it was not there on the bank statement. We are going to reflect it on the bank reconciliation statement. Credit outstanding deposits. Credit outstanding deposits. And what is the name of this deposit? What is the name of this deposit? All right, 31 May. Right, 31 May, 65,000. 65,000. .3. The following checks were recorded as outstanding checks in April's bank reconciliation statement. Okay. And we are preparing May's bank reconciliation statement. These were outstanding in April's bank reconciliation statement. So our question is, were they later reflected or were they reflected in May's bank statement? If they were not, we should come here and reflect them as outstanding checks. if they were reflected on the bank statement, then it means that we cannot reflect them here as outstanding checks. So let us see now. All right. This check, this check, this check. All right. Only check number 441 was presented for payment in May 2017. Check number 441. All right. The last one. Which means that these two are still outstanding. So we are going to have check number 436. Right? Check number 436. 11,900. We are going to have check number 440. 14,000. Right? 4.4. The following debit orders were noted on the bank statement. Right? Okay. So the entity will record debit orders when it receives the bank statement. It will see that, okay, we have this payment, and this payment when it has received the bank statement. So it means that, because this transaction is saying the following debit orders were noted on the bank statement, which means that the entity is only seeing now that we had debit orders. These debit orders should be recorded in the cash payments journal because these are payments. They were not recorded since the entity was waiting for the bank statement. The entity only saw that there were debit orders when it received the bank statement. So we are going to say the first one is for water and electricity, right? Water and electricity. 6,500. The second one is for insurance, right? 2,900. The third one, okay, is for rent. Right? 9,000. 4.5. The following clients made direct deposits to KA Furniture Stores bank account. So it means that the entity will see that there were deposits when it receives the bank statement, because these are direct deposits. Right? So what does that mean? It means that they were not recorded in the cash receipts journal. Right? They were not recorded in the cash receipts journal. Let us record them. Okay. The first one for Mrs. K, I'm just going to say K here. 5,100. Right? For Mr. S, I'm going to say S here. Okay. S 4,700. Then Miss Y 3,500. Right? Okay. 4.6. On 30 November 2016, Miss T Naidu provided a catering service to KA Furniture Stores. The bookkeeper issued check 220 for 15,000 to Miss T. Naidu on 30 November 2016. Miss T. Naidu has not yet presented the check for payment. So this is an outstanding check, right? It has not yet been presented for payment, and it does not appear on the bank statement. But it was issued on 30 November 2016. And we are performing reconciliation for May 2017. Which means that this check is older than 6 months. It has expired, or it is stale. It is a stale check. So when we issued the check, we recorded it in the cash payments journal. Since it has expired, we need to reverse this check. We need to cancel it. So how do we cancel something that was recorded in the cash payments journal? We record in the cash receipts journal, right? If we have something that was recorded in the cash receipts journal and we need to cancel it, we will record in the cash payments journal. So we are going to say, right, it was for catering service. Okay, let us just say this is check 220, right? This is check 220. Okay, or I can just say catering service. Catering service. Catering service. Check 220, right? Okay, 15,000. We have cancelled it. 4.7. Bank charges for the month of May was 250 and interest on overdraft is 120. Okay, so both of these we will only know about them when we have received the bank statement. We will know about our bank charges when we have received the bank statement. We will know about interest on overdraft when you have received the bank statement. So we won't know how much are these without any communication from the bank, right? So this means that we have to record these two in the cash payments journal. They were not recorded. We are only seeing them now on the bank statement. So we should update our cash journals. We are going to have bank charges. Bank charges. Bank charges. We pay bank charges, so we record them in the cash payment journal, 250. And we also pay interest on overdraft. Interest on overdraft, right? Because this is interest on a negative balance, which means the bank is charging us. We pay this. All right, so this is 120. 4.8. Mr. K.A. Loka deposited 10,000 on 31 May 2017 directly into the business bank account to increase his capital contribution. So you can see that this was deposited directly. So now, because we received the bank statement, we can only see now that, oh, there's a direct deposit, right? So this was not recorded in the cash receipts journal. This is a receipt because it increases the bank balance. And so we are going to say capital, and how much is that? 10,000, right? Let us see. Okay, 4.9. Mr. K.A. Loka went to the bank to deposit 5,000 into his personal bank account. A trainee bank teller at ABC Bank deposited 5,000 into K.A. Furniture Store's business account. Okay, we can see that the owner wanted to deposit this money. The owner wanted to deposit 5,000 into his personal bank account. But now, because of this mistake, it ended up as capital because it was deposited into K.A. Furniture Store's business account, right? And again, this is a direct deposit. This is a direct deposit. We can see, we can only see it now because we have received the bank statement. So we can see now that, okay, there was a direct deposit. This was not recorded in the cash receipts journal. So we are going to record it in the cash receipts journal. We are going to say, let us just write the name KA, right? How much is that? 5,000. Then 4.10. 4.10. Check number 470 for 281 was correctly recorded in the cash payment journal. But according to the bank statement received from ABC Bank, the amount paid was 218. Right? Check number 470 for 281 was correctly recorded in the cash payment journal. So it means the cash payment journal is fine. Right? So what is wrong there? The bank statement. Because you can see that on the bank statement it was reflected as 218. So we are going to say bank error. Bank error. The other question is, how are we going to reflect this? How are we going to reflect this? Right? How are we going to reflect this? The correct amount is 281 and the amount that was recorded is 218. So we can see that a check was understated by 63. The check was understated by 63. So the amount that was recorded on the debit side, right, that amount was understated by 63. So we should record this 63 on the debit side, right? Okay. And this is our last transaction, which means that we should do our calculations. We are going to start with the cash receipts journal. 167,000 plus this, right, plus this, plus this, plus this, right, plus this, 210,300. 210,300. Okay. This is total receipts. Total receipts. Okay. Then 202,000 plus this plus this plus this plus this plus this. 220,000, right? 770. Total payments. Total payments. Okay. Then we come here. We are going to say total receipts. Total receipts. 210,300. Then here, total payments. Um, 220,770. Then we balance off this, right? So we should add the credit side because we can see that we are going to get a big amount this side. 40,063 plus 220,770. Okay. We will get 260,833. 260,833. Subtract 210,300. We are going to get 50,533. Balance, right? Balance carried it down, which will be our balance brought down, 50,533. Okay. All right. So we should add the debit side here because we can see that this is where we can get a big amount. 4,970 plus this, right, plus this plus this plus this, right, plus this plus this. 115,533. 115,533. Then we subtract 65,000. 50,000, right? 50,533. Then we are going to say balance as per bank account. Balance as per bank account. So this is balance as per bank account, right? 50,533. We can see it here. Balance as per bank account, 50,533. So this is how we perform bank reconciliation. Now our balances are the same. Thank you.